Up guys, what's going on? My name is Ryan. I like to trade ETFs and do my technical analysis on the price action each week. So here today we've got Van Eck Vector's Gold Miners ETF represented by GDX. It's a senior miners, and what can we see? We're on the daily chart. First thing we notice is this 6-year resistance level. It's acted as very firm resistance multiple times over the course of the last 6 years. Second thing we see is this hooping pattern. It's not a legitimate pattern by any means. However, I think it's interesting that price has bounced off of these with the same direction and velocity that you would expect as if it was a ball, bouncing downstairs. We bounce off this level, straight up, straight back down to the next step. If this next step is curved more, and so we go straight across, we get hit at this angle, and we move down, up, and now we are towards the further side of this support level, and our hoop pattern has started to round and move upwards. Again, that's not a legitimate pattern, however, it is just something interesting that I've been seeing. Looks like I have a couple notes here. First note is that London and Europe have been displaying topping action, the gold-silver markets indicating a downside resolution. That's what I mean by this price has been kind of in an upward sloping move over the course of the last year and a half. Credit spreads are widening, yield curve is flattening, commodities are resolving to new lows. The speculative sector of the stock market is losing conviction. Speculative sector meaning QQQ. We've seen a psychological shift from growth to value stocks, and all of these market actions are consistent with the past 5 credit cycles that the market has seen. What's my next note? My next note is in regards to what I want to see if we break this blue line and further this long-term 6-year resistance level. I want to see 3 things. I want to see penetration, volume, and strength. So penetration, it must close 3% beyond the trend line. Volume, did volume rise notably into the penetration? And strength, did it just rise to the line and then feebly roll over? If it did, then any selling pressure will invalidate the breakout. So what do we have here? We have a bit of a descending triangle, though things have been getting a little bit tricky recently as we come into this narrower range. I did pretty well predicting us bouncing around here. However, as of late, things have been getting very tight and it's getting harder to predict. So if you find me bouncing back and forth between opinions, forgive me. So what do we have here? We've got a hidden bullish divergence. I want to point this out to you guys because it's very notable and apparent here on the daily. And since it's on the daily, it's much more significant than if it were on the 5-minute. So first thing, we have price making a low here and then a higher low. Our indicator makes a low and then a lower low. This is a textbook bullish divergence that we have in our hands. So what is a hidden bullish divergence? Well, hidden divergences are primarily useful for trend traders, as the occurrence of this pattern signals that prices have made a corrective retracement in a larger trend and that the trend is ready to resume. The main benefit of trading with hidden divergences is that the majority of the market's momentum is on your side as you're trading in the same direction as the larger trend. This is a key difference between the hidden divergence and the classic divergence, and one that many new traders miss when looking to implement these strategies. The occurrence of hidden divergences can also act as a confirmation that the original trend is still valid. So that's what I got on the daily. Let's go to the 2-hour quickly. On the 2-hour, we've left my original prediction. I've said many times in my videos that I've revised it because I think this descending triangle is more valid, but I have the ABCDE pattern still here on my 2-hour chart. So price rises up into action. We set our first resistance zone. We come down and set our second support zone. This is A, B, C, D, and E. I would have liked to see B come up and touch this, and then C, and then D, and then E, but they didn't. Price didn't rise up into this long-term resistance, and so that would invalidate my original prediction, which is a symmetrical triangle. However, it's interesting to see that as we move forward in time, this longer-term support level has held up here 3 times now. Once here at C and twice here at E. On the 1-hour time frame, let's take a look at that descending triangle. Here on the descending triangle, we've got price rises into the pattern. We hit our first resistance, come down, set our first support. This is A, B, C, D, and for the descending triangle, I would expect E to come right here. However, on the 2-hour, we see that E was along this black line. We have E below this blue line here. So as far as the descending triangle goes, I would expect price to come down and touch this E. However, this is a shorter period of time that we've collected support here. We've collected support here twice now, whereas on this longer 2-year black bolded line, we have been supported by this numerous times throughout the last 2 years. So it's interesting to see the intersection of this descending triangle with this longer term support here. In my last 2 weekend updates for GDX, I hypothesized that we would catch a bounce here at this level because of this exact reason, and we're barely holding on to it at this point. I'm fairly skeptical to see if we will be supported all the way just because this descending triangle fits the pattern fairly perfectly. I'm not sure if we're going to come all the way down and touch E, though it would make a lot of sense as far as the pattern that I'm seeing and what I would expect to play out. So the average distance to a breakout for a descending triangle is 64% of the way to the apex. Apex, again, is where the resistance and the support lines come to coincide. I went ahead and threw out this green bars here, and we came up to 1456 bars for where this comes and touches each other at the apex. And what I did is I took 1456 times 64%, and that came out to 932. 932 bars brings us to this blue arrow right here. So this would be the hypothesized point of breakout for this descending triangle. Interestingly enough, this also comes at the apex for this potential support line here. So we could get supported all the way up and then break out right here, or we could go with our theory number 2, which is we'll come down to E and then break out here. Let's go to the 30-minute time frame. On the 30-minute time frame, I have a couple of interesting divergences as well as the overall direction that I'm seeing right now. So let's start with these divergences. I called this in my video last week. I saw our CCI turning down here from this high to this lower high as price made this high and higher high. Said this was a regular bearish divergence because the indicators and the price action aren't lining up. That played out fairly nicely for us with this rollover here. Since that's in the past, let's go ahead and delete that. And we have some new divergences that are coming into play here. One thing, if anybody's an expert on divergences and stock prices, please give me a personal email. I'd love to talk to you because right here I'm seeing a couple conflicting divergences, and I've seen this several times before, and I'm not sure whether to just cancel each other out or which one would lead the other. But I've got a hidden bear divergence and a regular bull divergence. So as far as the hidden bearish divergence goes, we see a high here and a higher high, as well as on our stochastic, we have a high here and a higher high. But price leads in the hidden divergences, and we have a high here and a lower high. So this would be the hidden bearish divergence, but then we have a regular bullish divergence here with this low right here in price, and this higher low here in the stochastic, and this lower low in price. So this would be a regular bullish divergence, and I'm not sure what to make of it when both of these come to align so closely with each other. As far as the overall chart goes, I have 2 targets here. Both of them would make sense to me. I currently took a position in GDX and GDXJ and JNUG and Nugget this week once we came down to my add position box here that I charted on last week Sunday, I think, when I posted my videos. But we've got this descending channel, and I usually have 2 targets. I have a first target, and it made sense that we'd be supported by this upwards support line here, and so I added a position here, and if we do end up breaking down, I have a second target in which I will double down because this would complete the descending triangle. However, if we do decide to break out here, I won't miss the boat, and I'll get in at the lowest price here at the ideal time. So I'm not worried about sitting through a little bit of pain here with GDX, and I would gladly add more shares once we get down here to target 2. Right now it's unclear whether we are going to reach that, but we are in this downward channel right now, and we are seeing some weak bounces here. Not a lot of strength from the bulls in volume or price action, and we can see by the volume here that we have a lot more strength from the bears. And so with these hidden bearish divergences, it's very plausible to think that it might head down to target 2. And all I'm trying to do here with this channel, with this video, is provide some insight into what could potentially or probably or plausibly happen in the future. I'm not 100% bullish on GDX, as I just stated. I think that it could easily go down to target 2, but I'm prepared for that, and I have my support and resistance zones, and that's all I want to offer here with this channel. But for the meantime, we'll see what happens next week. Let's go to the 15-minute, and since this range is getting so tight, it's becoming more challenging for me to predict what's actually playing out here, and what might be playing out, since we're being supported by this long-term black line, is we might have to change our hypothesis and go from a larger symmetrical triangle to a smaller symmetrical triangle inside this descending triangle. So bear with me. We're going to walk through that real quick here. So since price rises up, we set our first resistance zone. We come down and set our first support zone. This bubbled A here in orangish. We have B up here. So this is A, B. We come down. We're supported by this black line. And you can see here what's kind of shaping out is we're coming into this symmetrical triangle here and not coming back down to touch this descending triangle. So I'm offering a second pattern in this overall chart, and it actually works out with our theory. So this would be our new larger symmetrical triangle. This would be our smaller symmetrical triangle inside of this descending triangle. So bear with me. So these bubbles right here are the smaller symmetrical triangles. So we have A, B, C, D, and we just hit E. Now, if the smaller symmetrical triangle turns out to be correct, we would see price jump up, flag here, and then we'd have a big breakout. We'd run into resistance right here. Again, we have a lot of consolidation in this range. We'd flag out, and then we'd come and hit our D here. And this run would probably be the full length of this smaller symmetrical triangle. And so it would make sense for price to break out here, and then we would go into our larger symmetrical triangle, which is with these bolded black letters. We'd have A, B, and then this would actually be C. We would break out of our smaller symmetrical triangle, come to D, and then I could see us being rejected here at this point, and then coming down to our E, which is the last leg of the pattern, and then we would break out here at E, which also coincides with our 64% of the descending triangle. This would make sense to me, and that's why I included it. I try to see things from all angles. You could ignore this if it's getting a little bit too complicated. Just follow the two predicted price paths that I have here. The bearish short-term thesis. So this previous, what I just talked about, would be a bullish situation. But the bearish case is we break through this and we take a look at our larger time frames, and this descending triangle is the legitimate pattern, in which case I can see us breaking down, flagging out a little bit more, and then coming all the way down to our final destination E, hitting a double bottom, and then we would basically have a straight shot up here, breaking out of this apex and also coinciding very nicely with the 64% range. Right now, I can see either of these two predicted price paths playing out. So let's go to the 5-minute and look at what my prediction from last week was here on a very short time frame. Thought I saw a bit of a cup and handle. I'm getting a little bit skeptical of it because it came down basically the complete move all the way down to the bottom here. Maybe not quite. It might still be playing out. However, I did see this as a neckline right here, this blue dashed line, which comes down and rejects prices at all points. If we come up and break out of this level right here, right at about 22.25, I think that we could see my first hypothesis on my chart, where we would have the bullish run upwards to about the 23.30 range. As far as an Elliott wave perspective goes, as well as my proposed price action from last week, it seemed to work out fairly well. I had us moving in with this Elliott wave with a 1, 2, long 3 leg, 4, and a final destination of 5. And then we were right in this range last week, and I saw kind of a diamond top situation going on here with this big drop, then this rise back up here. Came back, and then we decided to drop back down. So this arrow, I had my target with this bubble right here, it coming down and touching this black line a little bit earlier than it actually did. This could be looked at as a corrective wave if you're an Elliott wave trader. So we have our 1, 2, 3, 4, 5, A, B, and then we'd have a C down here. That was what I was seeing. After this, I had us jumping back up. So we're definitely setting in sort of a double bottom area of support right here, and this would make sense because if we drag this across, we do have a lot of consolidation and support built up over here. This black line is an extension from our previous descending triangle that we had predicted. And this black line has acted as pretty good indication of a bullish run or bearish run or support and resistance zone. So if we drag this over a little bit, I would be wary to see what happens right here. We can see that we were rejected right here before breaking through, and then we held up once right here, held up right here for a little bit, and then we broke below it. We tried to get back above it. We got rejected, and now we're coming back down here to our previous support zone. So as far as theories for next week, let's go ahead and provide a prediction for next week. We already have my 15-minute predictions, but it's always interesting to see things on a different time frame. So I can see us coming up here, and I like to differentiate my line so you can tell whether it's a divergence line or a price prediction line. So I can see us coming up to this resistance zone. Previous support becomes resistance, and I can see us maybe flagging out, and then I can see us breaking out here, coming back down to retest this previous resistance. Resistance becomes support now, and then I can see us coming up to this bullish. That's the bullish option of the two price paths that I predicted on the 15-minute. So this is going to be my price prediction for next week. And I will see you then. Wish you the best of luck in trading, and if you like this video, please like and subscribe. It helps me out so much. These videos take me a long time to make, and I appreciate you guys for watching them. Have a good weekend. Happy 4th of July.